If crypto is digital gold, then gold must be analog crypto. As you build your digital portfolio, don't leave your analog portfolio behind. Gold is a timeless asset that offers unique diversification, but there's a better way to own gold than paying storage and management fees. With monetary metals, you can own gold and earn a yield on paid in more ounces of physical gold. And it's all vaulted and insured on your behalf for free. Their Gold Yield Marketplace platform connects you with opportunities to lease or lend your metal to expertly vetted companies. You choose which opportunities you want to participate in, then sit back and watch your ounces grow every month. The question isn't crypto or gold. The question is how to maximize the value of your assets so you can be better prepared for the future. Earn 2 to 5% on gold, or if you're an accredited investor, you can earn 12% on silver in their latest offer. Go to realvision.com/metals.
Hey everyone, look, sorry, this is the cheesy interruption that you get on YouTube channels, but they're really important. I'd really appreciate it if you just hit the subscribe button. You see, it makes a difference to know how I'm doing, seeing the growth in subscribers, if we're getting the right content. Obviously, comments help as well. But hitting the subscribe button allows me also to book the best guests. It really does make a difference. So if you do enjoy this content, and I know you do because you keep coming back to watch it, just please hit the subscribe button. Sorry again for the cheese, but it is important. I appreciate it so much. Take care.
Hi, I'm Raoul Pal, and welcome to my show, The Journeyman. And as you all well know by now, this is my exploration where I take you on that journey to the nexus of understanding between macro, crypto, and the exponential age of technology. Now, I've always found that doing these interviews is immensely helpful for me because I get to learn from other people and you get to lean over my shoulder and learn as I go along. But sometimes in your life, you get the odd person who changes your life, and those people change your trajectory, and you're very lucky to find them. They only happen a few times. And, that I think is the serendipitous journey of building a network. Building a network is one of the most important things that we can do in our lives. It really adds value to you, and you do it by adding value to other people. The more value you bring to a network, the more valuable it is to you in the end and to everybody else. And, that's one of the things at Real Vision we do so much is we have this whole Real Vision network, which is our members, tens of thousands of members in pretty much every country in the world. And we organize Real Vision meetups where people get together in person. They talk to each other on the website. There's chats, there's regional chats, there's macro chats, there's crypto chats. We encourage a vibrant network. And we've got the incredible crypto gathering event in Miami at the end of January. Now, all of this stuff is available for you if you are a Real Vision member. So make sure you do join that network as you join Real Vision. Those of you watching this on YouTube, you're missing out on really what's important. So realvision.com, sign up for that, because network for me is the most powerful thing. For me, one of the most powerful things, the best thing that happened to me was working at Goldman Sachs. I couldn't get in after university. My CV was not good enough. I went to a crappy university. I had no chance, but I worked my way up there. In fact, I focused on working there. Every day when I was working my prior jobs, I thought, well, one day I want to work at Goldman. And then one day I got a message from the head of equity derivatives at Goldman who said, look, we want you to come and build a hedge fund business here. And that was what I try and do, is manifest a destiny, manifest a future by thinking about it and focusing on it. So the paths that come in front of you, you're trying to take paths that go into the choice of where you want to go. Now, it doesn't always work, and that's fine. It's not expected to be foolproof, but I think it really helps. You kind of ask the universe and give into the universe to make that happen. When I left the hedge fund industry, I started Global Macro Investor, my kind of premium research service. That's read by family offices, high net worths, sovereign wealth funds, asset managers, RIAs, and hedge funds. It's, I think without question by now, got the best track record of any research service in the world. I've been writing for 20 years. I'm immensely proud of it. We had our ups and downs too. Obviously, you go to globalmacroinvestor.com and check it out. You can read the story there. But it's not about the story of GMI. But the fact is my next guest was the third ever person to sign up. After GLG, who was my ex-employer, and Goldman, my employer prior to that, this guy signed up out of the blue. And he's been with me and we've been close friends ever since. This guy not only showed me what a great macro investor can look like. I mean, he, without being very public about it, was one of the main players behind the CDS trade, the big short trade. He did exceptionally well. He saw it, and he ran money for some very famous people and did extremely well. The European sovereign crisis, he got that one too, well before anybody else saw it coming. He was the guy. So this person, Mark Hart, has been on Real Vision several times. In fact, many of you have seen his original masterclass interview where he talks about some of those stories of old. But Mark's bigger than that. He's in fact probably one of the most influential people in my life. When I grow up, I want to be Mark Hart. You see, when I launched Real Vision, Mark was very helpful with Real Vision, and obviously was one of the first key interviews that we had, and people didn't know him and people were blown away. But he also introduced me to Tim Ferriss and said, hey, I've been doing this with my life and re-engineering my life. And Tim Ferriss was on Real Vision, and I was on Tim's podcast, and Tim's is one of the biggest podcasts in the world. But that started me a journey of health and wellness, and that was Mark that started that for me. Also, Mark, you go to his office, and his whole office is set up around wellness, learning, art. Incredible. He's kind of a bit of a Renaissance guy. And I've always been jealous of that of him. But every time I see him, he comes with new perspectives. I mean, whether it's talking about flow state, whether it's space. I remember he came to a Real Vision event and started talking about how his big investment thesis was space. And this was like 2017. I'm like, what the fuck are you talking about, Mark? Obviously, he was dead right. And that's been a big thesis for many people. And we've seen what has happened since. Mark has the ability to see in the future, seeing the subprime, seeing the situation with Europe, seeing space, seeing many, many things. Mark sees well ahead of anybody I've ever met. Now, doesn't mean he's always right. None of us are. But he really is one of the most brilliant thinkers I've ever met. And it's a pleasure for me to have a conversation with all of you with Mark Hart. And as I said, when I grow up, I want to be Mark.
You want to unfuck your shit? This is live.
Yeah, that's being recorded. Hey, listen, if you want to unfuck your future, then come and join us in the Real Vision community. Incredible platform, amazing content, some of the smartest people in the world, and amazing tools. And guess what? It'll cost you nothing. Come to realvision.com. I'll see you there, and let's help you unfuck your future. Join me, Raoul Pal, as I go on a journey of discovery through the macro, crypto, and exponential age landscapes. In the Journeyman, I talk to the smartest people in the world so we can all become smarter together. Mark Hart, how the devil are you?
Wonderful, Raoul. Thank you for asking. How have you been?
I've been great, and I've been so looking forward to this because you and I are good friends. We never get a chance to get together enough, and we always have great conversations when we do. And I know people at Real Vision always love it when you come on, and you're very scarce when you come on, but everybody hangs on every word just because you always think of the world in a very different way. And so it's always a pleasure. So, Mark, give us we're going to dig into a lot of things because you and I have a lot to talk about, but what's your overall framework right now? How are you thinking about your investing life and how that focuses your attention on what matters to you right now?
Well, I guess that I have been thinking a lot about, the world. We have an election obviously coming up, and it's kind of, I guess the sort of two sides couldn't be, further apart in terms of kind of the world that we're going to get. And I worry, quite a bit about rising axis led by China in a sort of a clash of, civilizations. And I think that the United States has put itself in a fairly weak position, or has has ended up in a weak position as we've geopolitically stretched ourselves out, overcommitted, not secured supply chains for a number of things, whether it's critical commodities or whether it's finished goods. And on the other side of the world, you've had China, who has domesticated supply chains, who has focused their growth on military. And the economy in China, for instance, is something that we've talked about a lot. Has been very lopsided and in many ways driven by a massive real estate boom, real estate property boom that seems to be in the process of unwinding, and it probably gotten much larger. And so, economically, I think it's more difficult for China to kind of win the battle with the United States to for instance, make the yuan a global, or a digital yuan, a global currency. And it seems as though there's a risk right now of China pivoting to sort of achieve its goals kind of through conquest and coercion instead of through direct competition. So I'm afraid that I'm very afraid. I mean, it's maybe a fat tail risk, but I'm very concerned that that you have, whether it's in months or years, a kind of simmering sort of geopolitical, already multiple wars on multiple fronts, really kind of accelerating. And so I've talked a long time about the U.S. needing to secure supply chains, the U.S. needing to basically build up its own strengths and in order to counter this. And I don't think that the U.S. has done a particularly good job. So without diving too deep into kind of my geopolitical take, I've thought, I guess, maybe from a career perspective, that trying to focus on, investing in a way that can help the U.S. Build up its strengths, maybe is kind of the best use of my time and my thinking. So my focus is in a couple of areas. As you know, I've been a long-term bull on Bitcoin and kind of Bitcoin-related investments. I haven't gone nearly down, the rabbit hole that you have, but I think that there are a lot of ways to, I guess, take advantage of that particular sea change. And I think that the world right now is sort of, and I know I'm all over the map, but you have like progress is typically like achieved by breaking through, incumbencies, breaking through oligopolies, and whether those are, kind of, government oligopolies, or whether it's particular industry that shuns competition, i.e., shuns technological advancement because it's a threat to incumbents. So I've sort of tried, I guess, throughout my career, I've tried to find, incumbencies that that are sort of like overstretched or, vulnerable to disruption, and then try to find, ways to, invest in that.
So let's talk a little bit about your Bitcoin view. So what is your kind of overarching before we go into all of the other technology and other stuff you're investing in? What's your overall thesis on it? Why does it matter to you?
Yeah, well, I wouldn't say that I'm like religious about Bitcoin per se. I do think it's has the potential, and Bitcoin related, to be extraordinarily, disruptive to the sort of incumbent financial system. And I think that's why you get sort of the, shrieking attacks on it as an incumbent is sort of under threat. But I guess to me, and I've talked about this, I think, on here, it's like trying to understand sort of the value of Bitcoin or a value of, any kind of asset, and what makes it, what gives it value. And I guess the sort of 6 characteristics that I've outlined before that kind of define the value of any asset are access, awareness, security, patina, kind of return on investment, and use as collateral. And I've talked about this quite a bit, but where I think we are now is as Bitcoin is kind of continuing to be adopted, there are a couple of those areas. Like if you think about it, like to cut the back, so like access, how easy is it to access something? And I think that as Bitcoin is spreading globally, that access is improving, maybe relative to other currencies, other stores of value, et cetera, et cetera. Awareness is continuing to improve, and it's always changes in the 6 factors that will drive the price. Security, obviously, Bitcoin security at this point can be pretty well perfected. One of the problems, like with alternate assets like the dollar, is in fact a lack of security. It doesn't mean that there's no value in dollars, or there won't continue to be valued in dollars for a long time, but there's a tax on dollars. I pointed out that I think that tax is the sum of sort of productivity gains and inflation. So that's sort of your bogey that you have to hit, or that's the tax on holding a dollar. So and I'll walk through as a little explanation I like to give. If you have a basket of goods that are $100 at the beginning of the year, $102 at the end of the year, then you've had kind of 2%, CPI inflation. But if productivity gains, non-farm productivity, had been say 2% over the year, then that basket theoretically would have been worth $98 at the end of the year. And so it's that delta is sort of the tax that holders of dollars are paying right now. With Bitcoin, I guess it's a little over 1% inflation and supply. And so, that security seems to be, much better for Bitcoin. And looking forward with, expected significant deficits and debt to continue to be run up in the developed world, you would expect a monetary policy monetary policies that would facilitate that just debt growth. And that's the world we've been, living in for a long time. But I think that from Bitcoin's perspective, and, gold and other types of fixed supply assets do particularly well, kind of in that environment. Patina is just simply the gloss, the feeling maybe that you get by
status, almost
status, right? And it could be, there are different reasons to hold, kind of different assets. Maybe Tesla has been overvalued for a long time because of the personality and the image that Elon Musk puts out. And I think Bitcoin has some of that. I think though that, and then return on investment, there's not there can be a return on Bitcoin. Typically you think of Bitcoin as you're holding it in your wallet, and it just sits there and inflates, or you hold it in an ETF and there's a small negative carry holding that, but it benefits. I think that one thing that's interesting though on return on investment is that Bitcoin, like on the balance sheet of a corporation or in the hands of a more sophisticated player, is actually worth a lot more than a Bitcoin in an exchange. Or
what do you mean by that?
Well, I mean, for instance, there are companies out there that buy Bitcoin and they hold it on balance sheet. Universally, those companies sort of trade at a premium to the Bitcoin on their balance sheet. So and of course, the volatility of this company is through the roof. So there are opportunities to do, all kinds of things, whether it's if you have a constant strategy of acquiring Bitcoin, you can, sell puts and acquire more as it comes into you, or you can monetize that volatility. There's a correlation, obviously, between interest rate and volatility. And the higher the vol, the higher demand for, return. So, corporations can either use their Bitcoin and lend it out at a higher rate, or, there's some companies that are out there that are selling, convertible preferred type.
And the other side of that trade, because I don't fully understand the other side, is the convertible arb guys, right? Mm-hmm. So what are they doing? Selling vol against it, or what is the trade that they're doing that's absorbing billions and billions of dollars of this?
Sure. Well, so I guess like a convertible bond has it's basically two components to it. One is a bond that invests and you get a rate of return and interest. And then there's also this component of optionality, which is you basically have a bond and an option. And the option is, to convert that bond into equity at another price. So because of the very high volatility of Bitcoin and the high volatility of companies that hold, the stock prices of companies that hold, Bitcoin on balance sheet leads to very high realized vol. And so the value of that option component of the convert in a much higher volatility environment is worth much more. So the play on of course, the company side is a company is, you own Bitcoin and Bitcoin goes, number go up and your stock price goes up and, eventually those bonds are converted into equity. They're no longer a liability, but, you've kind of sold that option at a Bitcoin price equivalent, Bitcoin per share price equivalent at a massive premium to the actual price of Bitcoin. You take the proceeds, you turn around and you buy, Bitcoin, and you rinse and repeat. From the ARB's perspective, they can get a steady return with this gigantic call option, and that, and what they would do is they would buy the convert, and then they would delta hedge their position, short out the stock, buy the convert to some extent. But the possibility is, of course, that you get you have your downside protected as the buyer of one of those, and then you have this.
So is he selling the volatility cheap? Is that what's going on? So therefore, they buy this, hedge out the delta, and run the long vol. I mean, what is it what's he doing to make it so attractive?
Well, I mean, when you say he, I see you're talking about CEO of a particular company. I'm trying to be a little bit more, generic. But yeah, I mean, and maybe I don't understand the question exactly. I mean, the opportunity is essentially to, raise a lot of capital at an implied Bitcoin price that's extremely high, and then take that capital and buy, Bitcoin at market, which is a massive discount to that price where you're effectively raising it.
Yeah, but I'm wondering why, if the vol is priced so richly, why the ARBs are taking the other side of it, or are these companies underpricing the volatility?
So I don't think the ARBs are making an opinion on whether vol is overpriced or underpriced. I guess maybe they are at times, but historically, volatility has in any equity that holds Bitcoin on balance sheet has been extremely high. So I don't necessarily think that there's an expectation that volatility is going to collapse. Maybe it will over time, but the likelihood of it collapsing is probably more in an environment where Bitcoin has grown dramatically in market cap, and as it gets bigger, obviously volatility gets smushed. But in that scenario, the price has gone up probably quite a bit.
You said that there's more value of this on a corporate balance sheet maybe than in other forms of holding Bitcoin. Do you think we'll see more people using, the banks aren't really allowed to, but do we think at a broader level we'll see people adopting this? I mean, there's a company in Japan that's been doing it. There's several smaller companies. Maybe Michael Dell is doing it. We don't know yet. It's getting interesting. Do you think it spreads more in this cycle?
I do.
As an idea?
I mean, the success that corporations have had in taking on Bitcoin has been pretty dramatic, and stock price performance has been, really incredible. And I think that, a CFO of a company has to think about that tax on dollars as well. And, in a low inflation environment, holding dollars is fine. It makes a lot of sense. Right now, you're going to lose half the value of your dollar in 10 years if it just sits on your balance sheet. So I think that there is an incentive to protect the balance sheet better, and maybe just using cash isn't the most.
But I talked to some CEOs of some of the largest companies in the world about this, and I'm like, what do you do with the cash on your balance sheet? And they're like, well, usually it's to either acquire other companies or to invest in office space, manufacturing space, whatever it is.
Yep.
And I'm like, but those things go up in line with the debasement of currency, so they get more expensive every year, but your cash doesn't. And they're like, yeah, we understand that our cash is worth less every year, particularly in the assets that they buy with that cash.
Yeah, it's almost mystifying that there hasn't been, much more corporate adoption of Bitcoin on balance sheet. I think part of it has to do probably with the way it's accounted for, where you don't recognize gains in the price of Bitcoin on your balance sheet as earnings, but you do recognize losses. That accounting treatment, I believe, is going to be changing at the end of the year. People have the ability to mark their positions market. I think that'll be a change. But I think that generally speaking, the psychology, it's kind of tough to go as a CFO of a company or a CEO of a company and do something that's so out of the kind of mainstream. And if you fail, you want to fail together, or most people do. And right now, you're kind of on an island if you're out there, pursuing that strategy. And there are probably a lot of other kind of hidden forces that are, also discouraging corporations from, holding Bitcoin on balance sheet. I mean, the math for a bank, they can't custody a Bitcoin. It eats up their capital for doing it for kind of no return. And that's actually kind of what I was getting at, is the number 6, factor that gives value to any asset is used as collateral. And it was obviously, tulips back in the tulip bubble. It was, the reason tulips, went to mind-boggling prices wasn't because, they were pretty or anything. It was because people were able to use those tulips as collateral to borrow money. So the demand for them increased pretty significantly. It's back, for instance, in during the European sovereign debt crisis, one of the things I was wondering a lot about was why are the bonds of different countries that have completely different demographics, different fiscal positions, why are their bonds all trading the same? And the reason is that the European Central Bank will accept any EMU government debt as risk-free. So you can get 100% loan from the ECB against any European bond that you buy. And so, Greece ended up defaulting, and it was a 30-some-odd cent, recovery. But it didn't look like they were going to default for a long time, because why would they if every time they issue bonds, the buyers know that they can take those bonds and immediately post them as collateral to the ECB and receive cash. And then they also know that in future issuances, they'll always be able to get them done and always be able to refinance, because the ECB will always accept it. And so, that use as collateral really can drive kind of exponential moves as any asset goes from not being used as collateral to being used as collateral. The price performance can be pretty, extraordinary. And, one of the things that some corporate companies have done is if you issue a convert, you're, well, not explicitly, but you're not necessarily setting aside Bitcoin as collateral, but it is the Bitcoin that you're planning to buy that effectively is the reason you're able to borrow that money. And in fact, some corporations have been able to specifically, use Bitcoin on their balance sheet as collateral to borrow money. So I think that trend, it's barely begun, and I think that it's likely to accelerate. And I think that the implications for the price would be pretty kind of...
Yeah, we see that on private sector level. I had dinner here in Cayman with a guy who Dan Tapiero has invested. You know Dan.
Okay. Yep.
And what they're doing is Bitcoin lending, and a lot of it is for houses. People have huge amounts of Bitcoin on their balance sheets, and they want to go buy a nice house, and so they just borrow against the Bitcoin. So we're seeing it being used as collateral significantly already in the kind of DeFi or CeFi sector. But we've already seen MicroStrategies borrow, I think, from JP Morgan or lend to JP Morgan. So it's showing that at the banking system level, as you're saying, we're starting to see the early signs of this is a collateralized product, and therefore, you know, the demand can go up significantly because it's not dead money.
I think that's right. I mean, and you know, you have, like, not to mention, and so I totally agree with that. And I think that corporations will, you know, vastly increase their holdings, you know, over time, and maybe other crypto assets. I don't, you know, exactly. And then at the same time, you know, you're getting adoption, you know, by sovereigns. And I think the incentives for sovereigns to hold, you know, Bitcoin in a fracturing world kind of only increase. And you're seeing it, you know, again, like corporate and sovereign adoption seems to have, you know, just begun, but is starting to accelerate. And these are kind of the gigantic, you know, pockets.
One of the things that was interesting to me is I don't want to name the guy, but the CIO of a sovereign wealth fund from a G10 nation, a Western developed nation. And there's not that many who've got sovereign wealth funds, so people can figure it out. But I was talking about Bitcoin and stuff. He's like, I cannot put it on the balance sheet. I said, why is that? He goes, I can't turn up to a G10 meeting.
Right.
Because we're then questioning the system, which is going to lead us back into this whole question of why it matters for geopolitics.
Yeah, no, I mean, there are definitely, you know, strong forces that exist, that are somewhat hidden, that, you know, have dramatically slowed kind of the adoption of Bitcoin. These are, you know, I mean, it seems a little odd if literally, why would anybody care what a sovereign wealth fund does with their money? You know, but obviously they do, and obviously there are consequences. You know, if you kind of get off sides on something like that, and so I don't exactly know what those consequences are, or why, you know, there is so much slow adoption. I've seen it, you know, somewhere. I mean, I guess, you know, but essentially you have like an incumbency that doesn't want to be supplanted, and you know, breaking through that incumbency is kind of how you know, society and the world sort of, you know, moves forward. And so, you know, there's certainly a battle as to, you know, on one side trying to, you know, slow or halt adoption, and another side trying to, you know, accelerate it.
I mean, that makes sense. And it's one of your investment philosophies is you're looking for those opportunities where there's an incumbent that's under threat, that there's a potential change. How does Bitcoin fit into your geopolitical process? Because you said that, okay, this is your overriding thought process. You're investing in things that fit in with that geopolitical structure. How does Bitcoin fit into that?
Well, I guess there are, you know, a couple of ways. I mean, one is obviously I expect, you know, much more sovereign adoption. You know, you have like competing blocks who want to, you know, for instance, the United States prefers that the dollar be the world reserve, you know, currency. You have China who wants maybe a digital yuan to be that, and probably you have a lot of countries, maybe particularly in the Middle East, who wouldn't mind sort of, you know, writing this one out and having sort of a little bit of protection, you know, in terms of holding reserve assets, regardless of the way that the world goes. Also, you know, in the world in which we live, you know, obviously the stock market has been strong, and it's been strong for a long time. But what has accompanied that is, you know, an accelerating rise in global government debt, and there's really only one way to deal with that. You know, I guess you could come in and just slash spending, cut bureaucracies, et cetera. But, you know, what's more likely in the past that we've kind of continued on down is simply, you know, central banks kind of facilitating that growth through growing, you know, money. So I think that the tax on dollars and on, you know, fiat currencies is more likely to increase rather than decrease. Whereas the inflation tax on, Bitcoin obviously, is reduced every, 10 minutes. So I think that, I guess from that angle, just a continuation of the current situation of large deficits and debt issued to replace that is a gigantic, kind of tailwind, for the industry. And then, obviously if the world devolves and geopolitical tensions turn more into, kinetic World War III or something, along those lines, a lot of, different historical, stores of value, certain equities, et cetera, could, be disrupted considerably. And that might be the time to own something more like gold or Bitcoin or something that is somewhat limited in supply.
So just switching on to broader topics now. When I first met you, you were a very focused macro guy, right? And you still are, but you kind of changed my entire thinking of the world because you went through, looking at these macro tail risk opportunities, and then you kind of pivoted to the upside tail risk of technology investing and some longer term themes, which was not traditional for your peer group at the time, right? It was very non-traditional. I never forget you coming to an event, 2016, saying, well, space is a big thing. Everyone's like, what the hell is Mark talking about? It always takes everybody 5 years to catch up with you, at least 5 years. So talk me through that transition from just being the kind of traditional guy. What changed you into thinking about technology and other investing that it is less common or was less common?
I mean, I think 2009 was a real, it was one of my worst years as a money manager after, having had, big success. I guess in 2008 was my best year ever. And 2009 was probably my worst. And tried to understand, like, what did I miss? And obviously there was the rally in equities, was very, tech led. And it's very clear that the technology, broad technology sector, software, et cetera, is growing at a much faster clip than the overall economy, and was quite set to continue to do that regardless of the direction of the world over the long over the long term. And so I started to try to, 2009, when you have a terrible year, you have to do kind of a postmortem or a analysis as you're dying. And it seemed to me that this was the area, technology and accelerating technology.
Yeah, but sorry, just to interrupt, but as macro guys, we were cynics. Yeah. And it was a very hard thing to become the opposite.
Yeah, but everybody had become kind of a cynic at that point, as well. I mean, people were looking for the next, I was as well after the, subprime and European sovereign crisis. Everybody was looking for the next kind of shoe to drop. And yet the markets were telling us, something different. I guess it was 2012, maybe, when Mark Andreessen wrote his essay, Why Software is Eating the World, that, pretty much, completely blew me away. It was sort of the roadmap that I was kind of looking for. So I ended up trying to, use, I guess, whatever notoriety I had achieved to build out networks in Silicon Valley and meet, venture capitalists, meet founders, and try to figure out, how to take advantage of this, huge theme that, regardless of the, fat tail risks going on, in the world and the potential downside of, you name what kind of crisis could come along, like over the long term, it seemed very clear to me that, we're accelerating and, technologically. And so the key was really to try to figure out, my position, how I could be, a part of that, not being a tech guy, but wanting to invest in.
And so, but you're running two frameworks in your head at the same time. One is there's a really dangerous tail risk out there. And the other side is I'm going to take the tail risk of the upside because I think there's a huge secular trend that people, that's quite hard to do for most people. Most people let the downside crowd their investments and they they stop investing. But you're not doing that at all, right?
No, that's definitely not. No. Investing. Well, I mean, even in a really dystopian world, I mean, you can have, gigantic corporations that sort of control it, or that do well. Or you can have technology companies that can do well. I mean, it's those technologies, in fact, that, some of them that makes the dystopian world. And so, I felt like, I guess, regardless of what happens, humanity's going to move on and accelerate, unless there's, something, destroys the planet or whatever. Even this is the long-term trend. And so, and I knew it was what I was missing, and I felt like it was, certainly, kind of underappreciated, I guess, in macro circles anyway.
I still think it is. So if you look at the balance of your investments between privates and public, to express this view and other views, what's the kind of balance? Because I've seen you going much more towards privates than you used to be. I mean, you've always been a direct investor in all sorts of stuff, from, logistics businesses through to technology businesses. But where's your balance of you allocating capital now? Are you more privates, or still a large part of kind of public, kind of macro style stuff?
Well, I have more private investments than I do, public. I guess I have a bucket of, highly liquid, assets, public securities, cash, et cetera, that kind of gives me my, peace of mind and liquidity. And then and there are obviously public market themes that actually aren't even technology driven per se, that I think are really interesting.
Yeah, let's do that, and then we'll talk about the privates, because that's a whole other interesting thing. So let's talk about the public side. How are you kind of positioned and thinking about the world?
Well, I think there are a few different areas that are particularly interesting. Obviously, what I call the Bitcoin related theme is interesting. I think there are a lot of interesting public vehicles for expressing that theme. Another theme that's been one of the worst themes I've ever traded, but I still think it's pretty compelling, is legal cannabis in the United States.
And why has that been such a dog? I mean, you've been investing in that space for a long time. There was a big rally, then it all fell apart. Is it just this federal banking issue that's the issue?
Yeah, that's for, I mean, again, you make, say, hidden forces. I mean, the market has grown dramatically for, consistently, the total market in the U.S., as long as I've been, on this theme. But I guess there's three different, groups that, capture that upside. And so one is, the illicit market, which is probably at least, has probably 2/3 market share. And then you have the legal regulated market, which is maybe 1/3. And those are rough numbers. They could be off. And then of course you have, government that takes their toll. And, currently it's the illicit mostly, and the, kind of government sectors that have, basically been reaping all the rewards for the extremely rapid growth that we kind of correctly predicted. So the cost of capital, I mean, it's an access issue where most of the cannabis names don't trade in major exchanges, and a lot of institutions have a tough time. There's really no institutional ownership, and several of the large brokers of world custody legal cannabis. You have obviously you have a much higher tax regime for legal cannabis, where they pay federal taxes on gross receipts, because cannabis is still a Schedule 1 drug. But I think the way to frame it is that You have the illicit sector that has probably 2/3 market share. They don't pay taxes. They don't have to, they don't have to worry about environmental impact of what they do. They don't have to worry about any of the regulatory issues. Certainly have, coerced or extremely, cheap labor. They don't have to pay healthcare. And so what happens when you have 2/3 of the market basically has these gigantic structural advantages over the over the legal market. If the marginal producer is the illicit sector and they're producing at a much lower cost than the legal sector, it pushes down both top line and bottom line. It squeezes, and that's definitely been happening. And you have obviously the tailwinds of new states allowing medical or allowing legal. You have the tailwinds of, increased consumption kind of across the board, particularly among, older people. So they're definitely large tailwinds. But I guess it's sort of the biggest problem is probably the way that the playing field, the current kind of legal environment really tilts the playing field in favor of the illicit sector.
And so are you comfortable holding a position to allow this to be kind of rectified, for something to change, for the catalyst? Or do you just trade it in and out of it now? How do you manage that? Because, you've got tailwinds that are clear. There's a secular trend. Problem is you've got these headwinds.
Yeah. I mean, it's been a terrible trade, and in hindsight, shouldn't have held the longer term positions, but it certainly was a much bigger exposure for me a couple of years ago than it is now, and it's not a theme I think that has to have federal reform. Obviously that would be great, but demand is really inelastic. You could have simply enforcement of laws that could really decimate, or the illegal immigration, for instance, in the United States has really fortified the sort of illicit sector. And I think any type of crackdown on lawlessness is would be a huge boost kind of to the sector. And all the while, the companies in the sector, the ones that still exist, because many of them have failed, they find themselves in a relatively sparse landscape of legal competition, and they've had years to sort of optimize their operations and adapt to kind of the current environment. And I now think you have a sector that many of the companies have shored up their balance sheets, been able to achieve growth despite the headwinds, and are kind of poised for what I think is sort of tremendous growth and probably appreciation and stock price with the right catalyst. And I don't know that it when it comes, and I can't say that I love this theme, for instance, more than Bitcoin related, but it is an industry that has fully domestic supply chains. It is an industry that I think does a real positive good. You have big drops in things like opioid abuse, even just the number of prescription drugs prescribed in places where cannabis is legal, either for medical or adult use, recreational.
What else is in your public book that interests you? What themes are also there?
Well, I think that one of the big things, kind of how when we went from, if we had to build a new internet in a sense to accommodate, the growth in technology. And when I say a new internet, like the last time, going from kind of dial up to, high speed across the board. And it took a gigantic amount of capital investment. You probably remember all the CLECs, the competitive local exchange carriers that took on gigantic amounts of debt and built out all this, last mile of fiber optic infrastructure. They all went, bankrupt, but then the system, kind of had that backbone that it could build on. And I mean, I think that actually back then I think it was in 2000, January of 2000, when maybe the last CLEC had a failed offering before the whole thing just kind of went to shit. But we built up like a gigantic kind of surplus of broadband capacity that we've been, consuming kind of all this time without really thinking about, will we always have that excess capacity? And now we're getting to a point where, this sort of needs to be rebuilt again. And literally the whole tech stack to accommodate AI and to accommodate the massive, consumption of electricity and of data. And it needs to be, I think, more, or less centralized. And so I think you're talking about building out, sort of satellite networks and data storage like off planet and in a distributed way. So I really think that networking and all of the different technologies associated with building, better switches, building out that type of capacity is interesting. So, I mean, I've definitely been focused on networking stocks. It's also kind of a driver and some of the private stuff that I'm looking at.
And any traditional kind of macro bets, or you're mainly kind of equity focused right now?
Well, I think the most compelling macro bet out there, which it's been my view maybe for a long time, is this, kind of migration inside of the United States. And I think that it's, specifically coming to Texas, Florida, maybe some other places. And obviously there are a lot of things that, hurdles, but for instance, the talent pool in California versus here. But I mean, I live in Fort Worth, which it would shock most people to know that Fort Worth is now the 10th largest city in the United States. And
people still think of it as a small cow town.
Yeah. And it is, there's not a huge amount of industry here, but the amount that I've just witnessed of kind of human and, financial capital moving here, and the business environment is, pretty dramatic, it's massively more friendly than a lot of other jurisdictions. And I kind of think we've sort of set off like a little bit of a feedback loop of migration coming here, and not just to Fort Worth, although I think Fort Worth is the optimal place for a lot of this capital to come. It already has, quite a bit of wealth, and you have some. I guess Fort Worth is probably like the largest city in the country without a major research institution located there. That's changing dramatically here with Texas A&M is building out. They're building out a gigantic campus actually in downtown Fort Worth. Texas A&M is probably the largest university in the world. It's not in a major metropolitan area. I think it's the second or so largest school in the country right now. And so, like, for instance, A&M wants to build a Kendall Square in downtown Fort Worth where they can help accelerate, companies. Spending $700 million just building out their campus over the next 4 years. UT Arlington is now setting up a new campus for 8,000 engineers just in West Fort Worth. And I think the kind of ecosystem is being built here. Obviously, that ecosystem exists in Austin. It exists to some extent in Dallas as well. And so, just from this gigantic migration, I think there are just so many different ways to play it, whether it's through real estate. We do have a lot of real estate here in Texas and Fort Worth.
I mean, how does it work with commercial real estate? Because you're fighting another trend there as well. So there may be university real estate that's required, but even that's not clear over time whether in a more digital world, how much that's needed. How do you think that through versus, obviously, if people are moving there, there's obviously just housing. I mean, that's another big thing. How do you think about this?
Yeah. Well, I mean, just to be clear, like my my experience in commercial real estate is I simply own the building that my office is in.
And it's a great building. I love your office. Yours is the coolest office in the world. Yeah. That's all I want to say.
It is good. It is very good. And that's something you can actually get in Fort Worth. I mean, can you imagine having, something like this in Dallas or LA or something? You just, can't do that. Fort Worth does have a lot of, it's sparsely populated. It's a gigantic city and with lots of, kind of potential for urban infill. But I think that the idea like for A&M, it's not that spending $700 million building out a campus, it's that they envisioned this as, holding maybe some of their most important intellectual property, some of their, attracting kind of top, academics and attracting kind of top, companies who can partner with them on R&D or can partner with them on, finding capital to build manufacturing or whatever it is. And A&M can actually kind of program the school around those sort of opportunities, this corporate collaboration opportunities. So I think that's their idea. In terms of like commercial real estate, obviously it's been overbuilt in a lot of places. Austin and Dallas are two, very obvious ones. Hasn't happened in Fort Worth necessarily, much lower, vacancy rates here, but I don't know. It's not the angle that I'm,
So what is your angle then?
Well,
because what you're saying to me in typical Mark terms is I've seen a secular trend that's starting. People haven't seen it yet. It's going to have spin off lots of opportunity. This is very typical of you. You'll come in with something, everyone goes, what's he talking about? They'll realize in 5 or 7 years' time what you were talking about because you're always ahead on this stuff. So, how do you play this?
Well, I think that there's just a gigantic arbitrage for any company to move to Texas. There's no income tax here. There's no capital gains tax. Texas, $2 cheaper for a gallon of gasoline than it is, California. It's the business environment is tremendous. So literally just a corporation moving and picking on California, it may have the worst governance of any of the states in my mind. So, picking on California a little bit, that's also where, some of the greatest companies are, the arbitrage in terms of, the quality of life arbitrage for employees, the cost of living arbitrage for employees, the cost of doing business for the companies is gigantic. So, I really spend a lot of my time trying to convince portfolio companies that I'm
okay. See, what you're saying is companies in your portfolio, your private companies, you're saying, listen, come here because it's going to make a dramatic difference to the potential outcome of the company.
Right. Absolutely. And there are huge incentives, government incentives and local incentives as well to come here. I think this is like if I were, trying to say, I'm not like I do make venture investments. I'm not part of a venture fund and I'm not really looking to become like some, venture capitalist or anything. But it does seem like, if you're starting in venture, kind of the way it's done is there's sort of a model for, each round and how the VCs come in and how they, they want to see certain things. They want to see certain growth, certain metrics. And it's kind of a moving business where, you find the company, you get to the next round, you get hopefully liquidity, you raise a new fund, you find new companies. And to me, the opportunity is like finding companies and helping sort of, negotiate some of the macro risks, supply chain risks that may come up and figuring out how they can, kind of become much more efficient and more prosperous. So, I think like facilitating sort of instead of I guess I would just say, I think, helping facilitate those types of moves, there's just a gigantic opportunity. So it's in venture, help your portfolio companies to, relocate. If you're a corporate CEO, you want to think about, I think we'll continue to think about moving to kind of these, more where you're appreciated a little bit as a company. And so I can't say that there's some like specific individual, like incredible investments that you could make. I mean, I'm sure,
Well, Mark, there's one thing that people don't realize, just at the simple tax level, the hurdle rate that you have to be of a person in Texas versus a person in California in the exact same trade.
Yeah.
It is an incredible difference over time, what it means to you. And people don't think this through. They think they're different, but it actually is a driver of returns over time is taxation.
Yep.
And so optimizing for that allows you to outperform over time. It's the same with companies. If you optimize for taxation, you will outperform over time. You'll have more free cash flow to do other things.
That's right. And so I think that's going to have to, that is the opportunity, I think, for companies. And so, but I mean, that's where to bet. And then obviously there's all kinds of other, sort of ancillary, kind of businesses that all do well. Like when you have, the type of population growth, I just think that the bottom line is you're going to have, you're going to have an increasing flood of, kind of people and capital moving here. And there are a lot of ways to sort of, capture that value. I'm blown away, obviously, by what Texas A&M is doing. I try to spend a lot of time talking to the people over there, figuring out how I can, leverage or how I can collaborate with them and helping them, build their vision and do the same.
So let's talk about some of the kind of private investments you've been doing, because they're always interesting. Let's start with space, because, again, most people would never have thought the cynical macro guy who was betting on crises is the next minute is investing in space. What's your thesis there, and what got you to look at this? Because, it's now becoming apparent. Things like Rocket Labs is a public company, and obviously Tesla, SpaceX, everyone's now becoming fully aware with. But when you started talking about this stuff, everyone was like, what is he talking about? Yeah,
well, it was purely launch costs. You could see when SpaceX started, was able to land and reuse rockets. I mean, essentially the cost of launch dropped by a factor of 10. And, talking with everybody in the industry for a long time, it seemed, poised to continue to just collapse. And so that just, I couldn't even imagine all the different types of, it's kind of like going from dial up to high speed, it opens up all kinds of markets that may not exist. The starting point is there's this just gigantic tailwind of absolutely collapsing launch costs.
But why do people want to go into space? This is what people don't yet understand. They're like, oh yeah, but sure, this was a government thing and governments did it for pride of nations stuff. But it's a corporate enterprise. Mm-hmm. What is going on?
Well, I mean, there are obvious things like, communications or, energy or, acquiring energy in space or, building distributed networks of, in space where they're not in a fixed location. Their manufacturing in space is taken off. As a company I've invested in that found that they can, manufacture different things much more specifically, like we're more exact,
efficiently.
Exactly. Efficiently. There is, down the road, which people laughed at me a lot about, but asteroid mining, which is certainly something that happens long term. There is the moon, which has fuel that can, whether it's helium-3 that can that will be used for fusion energy, or whether it's just simply exploring beyond. Space is kind of like it's the frontier, and it's frontier investing in a place where you don't have so much the incumbencies preventing growth. I mean, the incumbent is.
Well, you did have the incumbency. It's very much like Bitcoin, right? You had the incumbency of this massive state architecture that was hugely inefficient. Then suddenly, out of nowhere, the private sector just took it. I mean, 90% of all launches are now private sector.
That's right. And so kind of that incumbency is, for the most part, kind of been broken through. And so, it's in many ways a land grab. And obviously, SpaceX is the early mover, and the wealth that obviously they've achieved is spectacular. It's one of the most exciting companies ever. But there are innumerable types of applying different technologies to space and using it. Innumerable use cases, and it's literally how we grow, and it is the frontier. So, I'm definitely been focused, and a lot of. I mean, I don't know if there's any like specific companies like to go into and explain sort of the thesis.
Yeah, let's move into other themes that you've been investing on the private side as well, because again, you always find stupidly interesting stuff really early. You and I had a dinner in San Francisco 10 years ago when we launched Real Vision. It's almost 10 years ago today, pretty close.
Yeah.
And I met this company, and they're doing just groundbreaking stuff, and you see all sorts of really interesting stuff. What are the things that are interesting you that you want to invest in?
Yeah, well, I mean that particular story is probably my that we had is maybe the most exciting investment that I've made. That was a company called Misapplied Sciences, and you and I met the two of the three founders in the lobby of the Mandarin Oriental Hotel, and and they had just left the Microsoft as in the Applied Sciences group, and they had an idea of creating a screen where every individual person looking at the screen without any kind of visual aid or any kind of wearable device would see a different something different on that screen. And for us at the time, the technology was you either see a light or you don't see a light. But the kind of the long-term potential of a company like that is that if they succeed, then you have every single screen becomes a smart screen that can deliver personalized content to each person that looks at it, or even can be.
And we're not talking here television screens or computer screens. We're talking gigantic display screens where I'm sitting next to you and I see a different thing on that screen than you do, which
That's
is
right.
like a bizarro quantum world.
Yeah. That's what it was. And I mean, this particular investment, Misapplied Sciences, which I can't talk about, I'm on the board of the company, but they basically, after we invested, they went dark for 5 years and they built their technology. And then they came out in the 2020 Computer Electronics Show with Delta Airlines, who's one of the investors there. Delta had the, keynote address, and they announced how they were going to be using this tech, and now if you go to like the Wayne County, the Detroit International Airport, the Delta terminal, you can go there and you log in, or you opt in, and you see this big screen, and it delivers all your personalized information. There'd be 100 people standing next to you, and they don't see what you're looking at. They see what they're looking at. And it's content that's just for them. And I mean, the technology now is such that the screens are fully interactive. So you can sit here, you can manipulate the screen that you look at, with your fingers, with your phone, you can access the web, you can play games on it. Personalized content can be delivered. It's at the same, and it is basically though an array of smaller LCD screens, and so you can theoretically make these kind of any size, and you can adjust the views. But the potential of a company like this is to have these screens kind of, it's like in every hotel lobby or every floor of every hospital, or the Intuit Dome, for instance, which is Steve Ballmer's LA Clippers' new $2 billion arena. There in LA, they installed one of these screens kind of for their VIP customers in one of the areas where, you go in and it is personal content delivered to every single person that walks in there. It can tell you where to get your food, or it can tell you, whatever, it can advertise to you. And doing this, I mean, what's interesting to me is they can build these screens for essentially the same cost is just a regular dumb, big LCD monitor, and on just plug it into the wall kind of power. But the potential is to really replace any and every screen. I mean, that's certainly in a public place where 85% of money is spent actually away from the home, away from the screen. I mean, it's just kind of one technology.
It's incredible. Okay, give me another example of something you've invested in, and then I'm going to ask you some questions about how you do this. But yeah, give me another example of something you found that you're excited about, where you can talk about it. So obviously some stuff you can't, but whatever you think you can talk about, either in broad brushstrokes or whatever, or specific.
Yeah. Well, I would say there are a couple of investments that I've made that they're interesting. Like one is a company that has figured out how to edit the genes of crops like corn and soybeans in a way that improves yield. And so there's a company, again, that I invested in a long time
ago. But is that not just standard genetic modified kind of seeds and stuff, or is it very different?
Well, it's not. You're not taking like genetics from another species and implanting it in this species. You're actually just altering the genetics of the particular species. And this particular company, for instance, has been going for a long time, but they've proven that they can take elite germ and alter it and improve crop yield by 10+%. So if you think of, which is gigantic, it's creating a new Argentina worth of corn and soybeans or whatever. And I guess it is a cautionary tale in this particular company. I mean, it certainly can be a very successful company, but we just assumed that once you prove, I mean, this is Norman Borlaug level stuff. This is this isn't just making a crop like a little more resistant to drought or whatever else. This is literally creating the same amount of product with 10% less land, 10% less fertilizer, et cetera. And what's really crazy about it is there are these hidden forces that sort of prevent it from accelerating, and who knows if it will now. Where they're basically two seed companies. They don't want to buy you. They don't want the technology. The commodity aggregators, they aren't going to sell. They're going to take in a crop that's come from these germplasms because it's not commoditized the standard way as there's specific, specifications. If you want to sell into China or you want to sell into somewhere else, you can only sell. You can't just sell like any corn or any crop. It has to be like a specific, kind of strain. And so I don't know really if there's much of a conclusion here, other than like the easy part was editing a gene to massively increase crop yield. That was the easy part. Hard
part is fighting the incumbents, which is the same story you've said every time.
Yeah, that's the hard part, is fighting the incumbents. And then that's literally the case. Pretty much every single major investment I've done, it tries to do that in one way or another. It's fighting incumbents. Sometimes it's been a disaster, like shorting the Chinese yuan, even though I feel like my work was good. Sometimes you break through the incumbent.
Sometimes you don't. Yeah.
Those are the kind of things that I'm looking for anyway. They're really, the sort of if you're right, it's world changing, which you probably won't.
So I want to ask you a bit about that. How do you source opportunities in the private side? Because this is cutting edge technology. These are very small companies. You don't get to know them. It's a network and stuff. Mm-hmm. And then how have you transitioned your mind to investing in this stuff, which is longer duration, sort of different measurements, or do you just think of it as the same kind of tail risk investing you've always done, and there's a bit of in the middle stuff where there's no price? How do you think?
I think it's very similar to the stuff that I've always done. It's kind of tail risk stuff. How to transition to it. I mean, it's oftentimes like hiring. I mean, a company that I'm working on right now, I went. My good friend Dan Babbage, who worked for Kyle Bass for many years. I mean, Dan's a, Harvard physics PhD, 2 years as a postdoc, Gordon Petty Moore postdoc fellow at Caltech in physics. And so, to understand a company, sometimes you have to go and bring somebody like that on to really, do the deep dive, because it's certainly nothing that I'm,
because that's a very, you and I've spoken about the company. It's a very technologically complicated thing.
Right. Yeah.
So you just bring on an expert to help you.
Yeah. Oftentimes, have to do that. But, really it is simply, I guess, the network that I've built. I mean, I see, for whatever reason, I have like an insane amount of, deal flow that comes across my desk. And, I think it's probably because, I've invested in this stuff and met a lot of founders, and it's just sort of kind of word of mouth.
But how do you select them then? You've got deal flow. It's not like you're a 100-person team or anything. How do you do this?
Well, there's not a good process. I mean, specifically, it's just like, I have a macro framework of kind of where I think the world's going, what I think is going on in terms of regulatory environment, in terms of, demographics, in terms of geopolitics, in terms of monetary policy, in terms of like how I see the future. And then I sort of try to find, the types of companies that I could envision, in that future.
Yeah, because most macro people tend to be too short term. You have to have a long-term macro view if you've got long duration investments.
Yeah. And that's all I've always said, I always think of macro in the very long term. I mean, it's really difficult to trade or operate in the short term, these days anyway, particularly like with algos and whatnot. They're much smarter than I am. So, that's one of the things is you have to kind of increase your time horizon in order to compete with, computers.
Yeah, and that's all I did as well. I just went just longer and longer term, and there's much less competition, and it's easier to capture a secular trend.
Yeah, and it's not how people are investing. I mean, if I'll invest in something that I expect to have zero liquidity for 10 years, even if it's successful. And I just want to make like a lot of those bets and then see if I can add any value, taking a board seat or being involved with, helping, managements typically have their core competencies, and then they try to fill in the gaps with, with outside consultants or employees or whatnot. I think it's really a fraught macro environment that to some extent we can, help out.
And you run essentially a barbell strategy. You've got liquidity because of your public's portfolio and cash and all the other stuff, and then you have privates. Do you purposely, like, profits that you make in one get reinvested in the long term, or are they just two discrete things that they just happen to balance nicely and give you what you need?
I mean, it's much more. I don't have like a specific sort of process. I mean, I'm just trying to read a lot and interact a lot with a lot of people, and just keep an open mind, and hopes that the right opportunities will come, and then when they do, just or when something does come along that's appealing, then try to dive deep and see if it works. But there's not a specific process. There's not an allocation percentage between
sort of trade by trade basis. You look at it.
No, trade by trade basis, and it's kind of three buckets, I guess. There's real estate, which is mostly my office and my house, and some other kind of little things that I think will do well over the long term. And then there's kind of private equity, which venture sort of investing, and then there's the public bucket, and those change quite a bit. I mean, I guess I have the luxury of I'm not trying to build like a
giant firm or
a firm at all, or or any kind of like family office type situation that's targeting certain returns and certain risk. I mean, sometimes the risk I'm taking on is massively higher than time. And that, maybe that's, to my detriment, but it just sort of...
No, I think for me, it's inspiring. Okay. I've got two questions for you before we wrap up, because you're just brilliant at all of these things. what's the best thing you've read recently? Or what should people read that they probably haven't read yet? Because you're always reading interesting stuff.
Well, I
what
guess
blew your mind recently? It can be really crazy because I know you read some crazy shit as well.
The crazy and the most interesting thing, and I can't go down the rabbit hole, but just a crazy book that like might blow your mind is called The Holographic Universe. And it
sounds right up my street because this is the kind of a holographic universe. Okay,
Holographic Universe, and I can't remember the author, but it's not a new book, but I don't think I could even begin to describe. Gosh, I should have had like several answers ready for this.
You can come back because it'll come into your head. But holographic universe, there's one. Okay, the other thing that you completely led the path on again, which is so irritating how good you are at this stuff, is you did the whole longevity lifestyle thing literally 6-7 years before it was on anybody else's radar screen. Obviously, Tim Ferriss. You and Tim were on Real Vision back in the very early days. Where are you with that now? What is your general, Mark operational health and wellness setup now? What do you do? What's your protocol?
Well, I guess it's, I have like my diet is pretty like hardcore, I would say for the most part. And it's similar to like the kind of the Tim Ferriss diet. It's not the, kind of no carbs except cheat on the weekends, a lot of weightlifting, a lot of...
So it's a low carb sort of Tim Ferriss style diet, not keto, which I do on and off, but it's low carb and slow carb.
Slow carb and...
a lot of protein.
I have a variety of different, I take a ton of supplements just to check.
What's your favorite supplements?
Well, I don't know, a couple that I've started. One, I've started taking like cilantro and taking a lot of like turmeric, trying to eat foods that are, but cilantro is kind of like apparently helps like purge like heavy metals from the body.
That's right.
A lot of mushrooms.
Yeah.
And
what about the kind of NMN, the David Sinclair style stuff, the NAD plus, all of that kind of stuff, that longevity stuff?
Yeah, so I take all of that. So I have a particular, kind of protein powder that I use called Momentum. I don't know. I think it's really good, but I don't know if there's probably lots of other stuff better, but it has a lot of those, including the NAD plus in there. I do infrared sauna several times a week. And a lot of like Brazilian jiu-jitsu, obviously.
You're still doing yoga as well?
I don't really do yoga. I'm like absurdly kind of limber. I do a lot of like stretching out but really just, meditation and jiu-jitsu or sort of lifting weights are kind of my main sort of, protocols, I guess. I love, cold plunges. I do that a lot. But I also, do you know what a one wheel is? Or, you've ridden one of mine before. To
get into flow state and balance and all of that stuff.
Yeah. So like electric skateboards, e-foils, one wheels, like surfing, all these kind of things, just to sort of like try to get into flow,
That's another thing you were very early on, was the whole flow state idea and how to channel it and almost teach yourself to channel it.
Yeah, I just sort of just pursue those sort of things, for a long time. I think meditation is one of the most important things, I guess.
And the other one you're big into is sunlight.
Oh, yeah. Yeah, anytime it's I go outside every day, take my shirt off and soak up the sun. If there's any free vitamin D, on offer, I'm a buyer. It's one reason I love living, here in Texas. Even in the winter, you get 70 degree sunny days. Do
you do testing? Like, I'm actually going to go to the Fountain Life, the Peter Diamandis, Tony Robbins thing. Do you do testing of all of this stuff, or do you just observe your protocol and presume you're getting it roughly right?
Well, I do like a couple of times, or maybe 3 times a year. I get, massive blood draw and just look at, different levels of various things in my body, and will, have someone I consult with that helps me like kind of tweak my, supplement intake. But I am I'm not sort of at the cutting edge at all.
You're not Brian Johnson, no.
Oh, no. I mean, I think it's fascinating. Started chugging like Brian Johnson's olive oil since I've watched him on a daily basis, actually. But no, I'm not there. I'm not that interested in going
that far.
Extreme, yeah.
Mark, as ever, an absolute pleasure. We talked about an incredible array of things, including your frameworks, how you think about the world, how you're living your life. You only gave us one book, but I'll forgive you because I've never heard of the book, so I'm going to order it right now. And I'm sure it'll be great because everything you do, you always jump these things. Oh, you gave me the fourth turning. I mean,
yeah.
You are, I mean, I have to give you credit for a lot of things. And, fourth turning was one of them. You always find stuff that nobody's ever looking at. And suddenly it's like, well, here you go. So
I'll tell you the book. I'll tell you the book I'd read. It's I read a long time ago, or all of them. But so Robert Caro is one of many consider the greatest biographer of all time. Well, LBJ is his primary subject, and he's written 4 biographies on LBJ, and apparently maybe a 5th one's out or is coming out. And in the first one, I mean they're brilliant, but the first LBJ biography goes through LBJ's childhood and through the 20s and 30s, and as he got into politics, and his relationship with FDR, his relationship with Sam Rayburn, who was the Texas who's the Speaker of the House from Texas back in the day, and Texas probably in 1935 was the poorest state in the Union, and at that time they found oil. They were able to break through the sort of Standard Oil kind of monopoly because it was on the frontier so far away, and some wealth was able to be produced, and it was essentially channeled into political power. And I think that like the history of the state of Texas is I mean, you get a better understanding of why Texas is what it is today from that individual book, the first of the Caro biographies of LBJ, than anything else that I've read.
Yeah, it reminds me, and I'd love to read that as well, of just reading Lee Kuan Yew's books about building Singapore.
Yeah.
It was just like the same thing. It was a swamp with no natural resources and no opportunities, and he turned it into literally the most advanced society on earth in one generation. Staggering.
Yeah. Although maybe arguably the most important choke point in the world. Optimal geography anyway for Singapore, but really I think that's the case with Texas as well. Texas is the frontier, and it always has been. Like as the population, moved east, and the U.S. population, moved west, it kind of stopped. Right here in Texas, in the middle of Texas, which is basically I-35, because west of here, it gets becomes like high desert. So you have poor soil, little amounts of rain. So this way you have like San Antonio, Austin, Waco, Fort Worth, Denton, Oklahoma City. That's where basically the population stops, and that is kind of the frontier, and it still is.
Well, I just have to come back down and see you. I haven't been to Texas for a while, so I need to come and see you at some point.
I would love to see you. We have great hotels here in Fort Worth now, incidentally, that we hadn't had before. We have a Crescent and an Oak Parish just right around.
Well, I'll find an excuse to come down and see you, my friend. But listen, thank you for coming on Real Vision. Thank you for sharing your thoughts with the world. I really appreciate it, as ever.
Ralph, thank you so much. It was a pleasure being here, and always great to catch up with you, and hope to see you in Fort Worth soon.
So, as you can see, Mark can talk about everything. We could have talked for hours and hours. The things that focus his attention, he has this geopolitical framework, which is actually very risk averse. It's like, geopolitics is dangerous. I'm nervous about it. Personally, I have an opposite view on all of this, but that doesn't matter. Mark is an incredible thinker. He could be right, I could be wrong, or somewhere between the two. Doesn't matter. The point being is that he's got that framework, and of which he then builds an incredibly optimistic framework, a framework of abundance, of technology, of the future, whilst also having this geopolitical framework. And then he makes sure his bets fit within that by being kind of proof or proofed against something terrible happening. Now, obviously, over the long run, not in the short run, obviously markets go up and down with cyclicality, macro factors. But what he's trying to do is move out duration, which is what I've done as well. I found I've become a longer term investor and the real returns lie there. And Mark has gone from being an event specific catalyst macro guy to this big secular thesis macro guy, well before I got there, obviously, because it's Mark. Anyway, I hope you learn something about how great investors think. And it's a real pleasure for me to be able to do this. Obviously, those of you who haven't joined Real Vision, make sure you do, because there's many of these there. Obviously, all of the AI summaries, but also once you've upgraded into the plus tier, you'll realize that amongst you all are lots of great investors. When you see the performance for the trade competition, I mean, several people up nearly 100% at the time of filming this in a month. There's some really smart people in Real Vision. You get access to them and their trade ideas and their research notes in Real Vision Plus. So make sure you keep that journey, level up, and get from information where you are today, if you're watching this on YouTube or watching this on Real Vision, or you get to level up to knowledge and then up to wisdom as you get through pro tiers. It's a journey we're trying to take you on so we can really help you in your investing lives. Realize that future vision of yourself, that manifesting of your destiny. You have to take the steps. It's not going to happen without you taking those steps. So go manifest, go to realvision.com, and I'll see you next time.
If crypto is digital gold, then gold must be analog crypto. As you build your digital portfolio, don't leave your analog portfolio behind. Gold is a timeless asset that offers unique diversification, but there's a better way to own gold than paying storage and management fees. With monetary metals, you can own gold and earn a yield on paid in more ounces of physical gold. And it's all vaulted and insured on your behalf for free. Their Gold Yield Marketplace platform connects you with opportunities to lease or lend your metal to expertly vetted companies. You choose which opportunities you want to participate in, then sit back and watch your ounces grow every month. The question isn't crypto or gold. The question is how to maximize the value of your assets so you can be better prepared for the future. Earn 2 to 5% on gold, or if you're an accredited investor, you can earn 12% on silver in their latest offer. Go to realvision.com/metals.
Hey there, revolutionaries. To join a community sharing insights like you just watched, head over to realvision.com. There you will get unbiased insights and exclusive access to the very best, brightest, and biggest names in finance. Be a part of our community of lifelong learners. See you there.